Hello, everyone, and welcome to another workshop in the Brand Swan Live series. I'm Jen Wells, and I'm really only here to introduce our expert speaker for today. We are going to be lunch and learning from other people's financial mistakes so that we hopefully don't have to make our own. Our expert speaker is Jeanine Hall of Quant Solutions. Jeanine has 15 years of experience helping business owners gain control of their day-to-day finances. Her company, Quant Solutions, helps business owners understand their finances by providing simple, effective, and relevant bookkeeping, accounting, and advisory services. And yeah, I am not going to blab on too much. I'm just going to go ahead and let Jeanine take over.
Hi, everybody. So I'm going to share my presentation now. So everyone should be seeing the lunch and learning from other people's mistakes. So today we're going to focus on just exactly where I'm going to look at these three core problems, which are getting paid, stop acting like a bank, and keeping your own books. So these tend to be common problems that I've seen time and time again. And I'm going to do this in a method that's more of storytelling and discussion. So feel free to drop questions into the chat if you identify, or if I ask a question, or if you just want to know more detail. Don't hesitate to ask. We can answer those questions as we go along, or we can save them till the end. So the first thing we're going to look at today is we're going to look at getting paid. So what's the common problem here? So I noticed that a lot of business owners are too afraid or uncomfortable talking about money, asking for money, and asking for consistency. So the first story I'm going to start with is a service-based business, a PR firm, and they are, so the way PR firms work is they contract with a much larger business, or even a small startup who's just starting to get some traction, wants to work towards a Series A, or and so they tend to have sound contracts, but it's a very deadline-driven business, and so releases have to go out on a certain schedule. Digital marketers have to work in the background so that they amplify press releases and interviews, and all of these things need to be moving together in conjunction. And when you are a service provider, you're in charge of your client relations. You want to keep them happy, keep things on date, make sure that any rough feathers that are being ruffled are calmed down. And in the meanwhile, you are also the sole person who is responsible for sending your invoices and making sure that they get paid. And then on the flip side, if you have inventory, or you sell a thing that people take away, you work very hard to build positive relationships with your store owners or the people who buy large amounts of your product. But sometimes the larger they get, the slower or less likely they are to pay. And so these are the two first problems we're going to tackle. And so the solution, when we get to these issues, is one, when you're setting up contracts, you want to make sure that you're setting up contracts with payment terms in mind. So a lot of times people focus on exactly what they're going to give. So your contract is, I'm going to sell 100 different units, or your contract is, I'm going to create this design by this date, and I'm going to work with these folks, and this is our schedule. And you focus really on the how and the what you're servicing, but you sort of brush under the rug when you're going to get paid. You usually agree to how much you're going to get paid, but not the when. But however, you can bake these into your contracts. You can make very clear rules that both parties agree to. And when you do that, it sets up very clear expectations. So they know if you say, I'm going to bill on the first of the month for work that was completed in the previous month, this is the next step. You do that on time. So you get that out. Now, I know the first sometimes comes and goes before we know it. But really make sure that you get that out exactly when you say you're going to, or really, really close to it. And you don't need to be nervous to do this. You've already agreed to it. And if you haven't already agreed to it, so if you're still in that gray area and you have old contracts that you haven't quite thought about, or where this wasn't baked into it, you still agreed to a payment for your services, for your time, for your things that you exchanged. And so there's no need to be bashful about asking for something that they've already agreed to pay. So if you do get a little nervous or insecure about this step, the secret tip is to set up an accounting at whatever your business URL is. So it doesn't have, and people who tend to have clients who do have a problem paying on time also make up an alter ego for this email. So you can say Sally at whatever, and Sally in her signature field is your accountant. And so Sally sends out form letters that's like, dear, client name, please see attached invoice per the terms of our contract. Let me know that you've received it. Thank you so much. Fake person. So what this does is it breaks up the psychology. You, as the business owner and the facilitator of the contract and the relationship, you get to be the person who stays happy and customer pleasing and making sure that things get done on time, but you're no longer the dog with a bone that's like, pay me, pay me, pay me, pay me, pay me. You now have a ghost person, even if that person is you, even if you're not to the point yet where you have an accounting department or you're able to outsource. If that's not something that's in your budget yet, this is you can make up an alter ego that is that, oh, that's just my bookkeeper. She's just following the rules. You know what? I'll have a chat with her. We'll get her to calm down. And you can use that fake alter ego as a scapegoat. So this helps tremendously as you're working to stabilize your company and get to a point where you can either outsource your bookkeeping or you get an office manager or someone in place who can do this for you. So does anybody have any questions or can relate to that, or are we feeling it? Any claps of hands or?
Not a question, but I just love that so much because I'm always terrified of annoying people. And I'm like, yes, tomorrow I'm going to have an alter ego and they are going to be doing all of the follow-ups.
And they can, and it's so easy. So the next is stop acting like a bank. Now this sometimes can be a little bit more of a complex issue to undertake. And so it's sort of, and the words that I'm using sometimes don't seem to correlate with how people think, but I'm going to use the story of a media production company. So they make videos for PR firms, for large corporate entities, or anybody who wants their story told. And so over the course of the year, they'll get like 100, 150 contracts. They'll be doing somewhere between like $3 and $4 million a year. These are great. This company is really rolling. They're solid. They're established. They've been around, but they constantly wonder why they have no money in the bank. And they're always like, can we pay that bill? Can we make payroll? Oh my God, like, where is it going? What's happening? And it's so stressful. Their finances are always so stressful. And the meetings tend to be very contentious because people are like, wait, I have all these contracts. We're doing all of this work. People are agreeing to pay me. They love my business. I'm not like, my sales channel is full. My pipeline is great. But the day-to-day getting my bills paid is a constant struggle. So with this particular example, what I saw is what they believed is the standard, the way that it's done. This is that catch-all, well, this is how the industry acts, so this is what I do. Not true. So they fell into that trap of, well, this is the way that it is. And what I mean by that is they were setting up contracts for 50% due at signing so that they could start the production, so that they could start the movie, which is great. So now they sign a contract, they get 50% of the value of the contract. They're like, all right, let's book those flights. Let's get those producers in there. Let me get my assistants coming in. We'll get the space rented. We'll do all of these things. And then the second half of their contract was to bill 50% after the work is complete. So they baked in a 20% producer's fee. So they are making a profit off of their contracts, but they're not getting the final 50% until the work is done and complete and out the door, which means there's 30% of their contract that they prepaid. So when we look, oh, I didn't move forward. So when we look at the solutions to this, and this is what I mean by acting like a bank. So they are prepaying. Like when you go to remodel your kitchen, you go to the bank and you're like, I'd like to take out a second mortgage on my house for X amount of dollars to do this renovation or do this, you know, repair my roof. And the bank's like, okay, sure. Here's your home equity loan. It's at this interest rate. You take this much time to pay us back. And then you go hire everybody and you get the work done and you slowly pay over time. But if you do this for your customers, if you get 50% down and then you have to float 30%, you're losing, you're acting like a bank and you're not earning any interest. Banks earn interest when they do that for you. You're just like, here is my gift to you so that you can stay in business with me and I want to keep you happy. You're taking on something that you don't need to take on, which is funding someone else's project for them. So the solution to this is work with your partners, work with the people you trust. So when you set up your payment terms in your contract, say I need 50% down so I can book the travel, I can book the shoot, I can find the location, but then I need 25% down after rough cut. Now I know this is very industry specific to the film industry, but there are like landscape designers do this a lot. A lot of designers, anybody who implements design, so this is a very common problem. Put in progress payments. It doesn't have to be 50% at the beginning and then 50% when you hand off the project. You can come up with your own milestones that are tied to physical things so that the person you're doing the work for gets an exchange. So like when we hit this mark, I bill for 25%. And when you hit that mark, you're like, great. And then your brand new fake accounting person address sends out the email per the terms of our contract at this milestone. Here is our 25% progress payment. And that way you stop prepaying or funding work for other companies. So this is something to make sure that you don't have to ask for money in advance. So the next issue that I see a lot is keeping your own books. So this is when you're small and you're just starting, this is very straightforward. You have money coming in and you have money going out, and there's usually not a lot of extra things that you need to do, even to do your own taxes at the end of the year. However, business, it's like scope creep. And everybody's very aware of scope creep. Like everybody wants a little bit more, a little bit more, and a little bit more. And then before you know it, you're like, boom, out of the water. And you're like, wait, how did I get here? So this happens with businesses too. It is, if you pull yourself back for a second, and you're not an accountant and you don't have a business degree, there is no good reason for you to assume that you should know how to do this. And a lot of business owners take this on personally because it's their personal business and it's their, it's their baby. It's like their business is their baby and they're trying, like they want to know everything that's going on around it, and they want to know how and where each thing is going. But that doesn't mean that you can keep books so that you are taking care of things that you don't know exist. And so what the solution with this is, one, accounting goes well beyond basic tax preparation. So there are many, many things that go under accounting. Simple bookkeeping is just record keeping. And that, of course, you can do. As younger business owners start to build up more businesses, they don't remember what a check register is. But I think most of us on this call do remember what a check register is. And before we could check our bank accounts on our phone at any given instance, and we remember like, oh, I spent money, I'll put that right down here on the register. Oh, I got money, I'll put that right here. Okay, I can go to the grocery store again. And that in and out it makes sense to us. But where bookkeeping grows beyond a check register is when you start doing payroll, when you start invoicing and recording sales before you receive the cash, when you need to apply partial payments to an invoice. So say your contract is for a 6-month job and you invoice once every 6 months, but you put the contract value in on the first invoice and then you're taking payments over the next 6 months. Well, in an accounting software, do you know how to apply partial payments to that invoice? Or are you creating one invoice for the full amount and then creating sales receipts or deposits each time you receive a check? If you do it that way, then you're double recording your income. You're recording your income by creating an invoice that posts to your income, and then you're recording your income again when the deposits come in, because you're not associating it with that invoice. So that invoice stays open as an accounts receivable on your balance sheet. And this is where bookkeeping is one of the first steps where bookkeeping gets more complex than a business owner knows. And they understand that they sent the invoice, but they don't understand, like, I hit this P&L report and it's supposed to tell me how much I made, but wait, it's full of other things. And it's like, I know I don't have that much money. Wait, what's happening? Where did this come from? And then once you do start getting to payroll, there's a whole slew of payroll laws that you have to follow. But even in payroll, if you think about the difference between a person, a personnel, an employee, or an independent contractor, you need to make sure that you understand the Department of Labor's definition between the two. Because should the Department of Labor ever come in and look at your books and they decide that your independent contractors were actually employees, they will fine you. And you will be responsible for the employer taxes, but because you didn't pay them as an employee, you now have to pay the employee portion of the payroll taxes as well. So and then they're going to throw on penalties and interest on top of that whole amount. And it's just going to be like all of a sudden you're going to get this bill that it seems insurmountable. The other nitty gritty things that get into here is predicting the future. So a lot of times business owners aren't quite sure when they work contract to contract, or they are even an inventory-based business. They're like, well, how can I even predict how many wholesale clients I'm going to get next year? Like, I mean, I have sales, but I don't know if they're going to come back. And they get lost in all these what ifs, and they get into a spiral of what if this and what if that, and it stops them from being able to make a budget. And the purpose of the budget is so that it's your light, like it's your lighthouse. It lets you know if you're going in the right direction or if you're headed for rocks. And so, yes, your budget will be wrong. And it does seem a little bit pointless to create and spend so much time doing something you know is going to be wrong. But the reason it exists is so that you know when you're getting off track so much that you either need to cut expenses, you're like, something's got to give because I'm not making as much money as I hoped I would make, or I'm making I signed more contracts than I ever thought. I am one person, I can't do this by myself anymore. And now you see, I have earned so much more than I thought I was going to earn, that I can now hire that contractor, or I can now hire that part-time employee, or I can now hire that full-time employee. This creation of what you know is going to be wrong becomes your lighthouse to let you know that you can head into the channel, or the channel is too low and you're going to die on the rocks. And so you like, that is the purpose. And that's why you do want to spend time doing that. So if you've been in business for a bit, or even if you're just, it's early, you can start small. And so by starting small is you can just have somebody come in and set up your QuickBooks for you. So if you don't, QuickBooks makes it seem like anybody can come here and do it and that it's ready to go. But what it doesn't help you with is process for your own business. So QuickBooks isn't going to tell you, oh, I see you're a service-based business that has 6 months long contracts. Let me set up your business so that you can set up recurring invoices that automatically send on the first of each month. Or, oh, I see you're an inventory-based business. Let me make sure that you have reminders set up for all these invoices you sent out to automatically go out if people don't pay you. These are things that a professional can come in and set up for you. And if you're not to the point where you can hand off or afford to have somebody pay for your accounting, this setup process will allow you to at least start while you grow to the point where this is something that you can offload. So that when somebody comes in, you're not paying extra money for cleanup. Because let me tell you, a cleanup job is exponentially more expensive than ongoing services or setup services. So you want to make sure that you're avoiding that trap of like, I got this, I can do anything in the world. I'm brilliant. Of course you're brilliant, but that you're brilliant in what you do. You're not, I don't do marketing for a reason because that's not my core skill set, but I do know processes and I do know how these things integrate, and that's where I come in. So my secret tip for this is having someone by your side who knows how these things work and how these things integrate and how these things set up will be worth their weight in gold, because it'll take the stress out of this process for you, in addition to letting you know what problems are going to come before they happen. So that really is the end of my presentation, but I do love to have a conversation. So I'm here if any of these 3 problems really brought to light some questions that you have about your own books or about where to start, or if you are doing these things and you don't understand why, I'm here for questions, so let me know.